Welcome to TradeTheMBI.com. This is John. This report is for the 7th of May. And, well, we had a nice little reversal off of the initial pop-up there. We had seen the short separation, and we didn't really care for what was developing here with the little pop in the green on a declining red as well as declining white. In fact, it broke into a lower zone as well. We should expect that to continue just a little bit, and it was interesting if we get this green that is developing in this particular bar right now while the market's up. It's got to move above the zone, because if it gets caught below the zone again, you're just going to cascade further and you're going to end up with this continual gradual decline on it. Those shorts have not gotten super active. The real nightmare would be if you had cyan moving up along with the steel. That usually produces very negative moves. And actually, I think that if we look at the Dow, we'll see that very setup. So crossover green, yep, that produced the candle, but it produced it on having been at the previous peak and falling down. It's usually going to create a little bit more decline before it turns around. Still not going to be a bad long when the setup comes in. It's just going to be a question of looking for the right signal on that turnaround, and it could be a day or two away. We'll just have to wait and see. Obviously, the readings could deteriorate. They haven't done so yet. So here you see it where you have the cyan moving up with the steel. As long as the cyan outpaces the steel, that becomes very negative. And you think, look right over here, would have been the last time when we saw the two of them rising together. Would have produced nice declining bars like that. And it can get dramatic, in this particular case, you got all the worst nightmares where you have the green moving lower. The only advantage is the steel moving higher. That hopefully can hold things up. Otherwise, you're going to dip below the red line, and then we can potentially see some further decay. So that'll be an interesting one to keep an eye out for. Before we go into those, let's go ahead and review our numbers. There's the Dow. Look at all those new sell signals. Now that's 100%. We don't want that one. We want S&P. And we'll scroll through those. A lot of sell signals there. Still a couple of buys, but not nearly as many as we had just a couple of days ago, in fact. And for the NASDAQ, similar look. Kind of gives you a pretty broad perspective that there's just a whole lot of not buying going on. So, and this is the interesting thing, because when you get that liquidity that came in on the 5th that popped things up, there were plenty of sellers ready to dump into it. So, common occurrence. Professionals know when to dump into retail, and it works beautifully most times. So we can see that USO was having problems, and so as long as we knew that oil is going to be in a little bit of trouble, we weren't expecting a whole lot of juice out of the market, even with the flux of new capital flying in. It's getting close, though. I mean, this could potentially reach even today. Going forward, that'll be the new candle going over here. We've had near matching lows on higher extreme histograms. So the potential for it, the fact that we've stayed above with the green, you just need to see now the red moving higher into a new zone. Not happening yet. So gold broke out into the new zone at the same point where it met the pivot, and that's held it up, but that's not particularly great news for there. What you would need to see is the steel drop well below, cyan move above, and then we could see the potential for a breakout. As it is now, if we get a lower move, the potential for getting in at a nice lower level could be attractive. And that's kind of a precursor that if gold's going to start picking up, then you're going to see some market challenges. We knew X was headed lower, and sure enough, it's this gap right here between your cyan and your red-white, particularly when you have steel all the way up here too. You get this divergence between the two sets of bars. Now, ideally, it's a worse short if you have the cyan above the steel, and that maintains. Not the case in this particular point, so just some modest declines, which is why we suggested selling of puts a little out of the money to allow it to collect some premium and weather the little declines. Likewise, we saw the same thing take place with CLF. It was more prominent on the 78-minute chart. You ended up with this beautiful spider right here at the high, which indicated, things are going to move lower, and sure enough, it's exactly what they did. So the warnings are there, in advance. I mean, we saw it even too with nice turnaround. We saw the bearish move on the bullishness for AIG even after the nice little pump. We're in the safety zone, so we weren't expecting it to be too dramatic a decline from there, but that actually caught some steam and you even dipped below the red line there. So that was a little bit more severe decline, but needless to say, we knew that it was still within the sell signal. WLT showed off on the pump that we had over here when it broke back with the cyan moving higher. Was just a clear sign that it just could not get out of its own way. And again, even though it did produce the little cyan, it did close higher, but you closed higher as you were breaking down below. Opportunity to sell your in the money calls at that particular point. Slight pop up gave you another opportunity there, but yeah, cascaded lower, now below the red line. So in line with what the readings keep showing. JCP likewise was, turned around, but then boom, it was right here. Cyan moved above, and there you go with the cascade in the deep red as it is. And there you go. This is why when you get a buy signal within the deep red, you've got to expect what? To take any gains early, because we knew this wasn't going to last on that 50K. And sure enough. So again, it's one of those where we can see it developing ahead of time, and this is the new advances that definitely give us the ability to see which one. Same thing happened with the last deep red setup right there. So it becomes really powerful when seeing that and being able to utilize it to your advantage. I mean, it really is helpful knowing that going forward, even before setup takes place. You would have even had your worst case right there when you popped up, had your stop at break even as you were rolling over, particularly on the red and that. And then it was just a bar later that cyan moved above, and sure enough, that led to the decline. Now, interesting because we're matching the lows on higher extreme histogram. This actual level is going to be interesting from a new buy signal when we get a little bit of a turnaround, but you've got to see a narrowing between your green and cyan. It's just one of those requirements in order for it to improve. Take a look at some of the alert stocks real quick. Apple, we liked Apple as far as what it was, doing. We know though that when you get above that 7.5, you're going to suffer, but still been above the white. A lot of extremes it'll have to retrace, but in the market weakness, it held up pretty decent. A lot of the other ones, not so pretty, because we were talking about how ugly a lot of these were. Even though they had produced these tepid buy signals, they were really weak and ugly. And I told you, just nothing about them was attractive. We kept seeing the lower peaks. And in these particular cases, this one, you have the divergence where you have the potential for the upside of it there, but continued to break down for Amazon. Google's been ugly for a while. Take a look at it. We had the deep red on the new buy signal, and I can just keep increasing the size of my little rectangle box right there as it continues to fade away. No surprise with that. Netflix, likewise, again, the big spread, lower peaks. The potential is, though, on a third one, could start to see a little bit of a turnaround, but not being able to get the green above the red, and that is a clear indication you just don't have a commitment from bulls on that kind of stuff. I mean, that's just like a de facto, barely touches it. It's not really a cross. And this is where, like on the 15-minute charts, I required that it cross both the red and the white, but it's not always necessary. Sometimes you really need to actually see the chart in this particular case to know that, no, that was a tepid kind of touch, as opposed to one that really crosses over and gives you a clean move above the line. PCLN has been ugly for some time. And as we've seen all the way back from over there, it's been in the deep red, so we weren't expecting much. The nice pop the other day gave a good opportunity to revisit that. Now, we knew that it was getting close to the potential of meeting here, and this will become a critical little junction right here, because if the green can get above the potential of a turnaround, it might need to move a little lower, retest that last dip below the red line, and then it could be clear sailing on a new signal, assuming it gets one. Tesla, again, nothing, same separation there, still weakness. In fact, it's getting worse there because with the lower peaks, and now you're dipping below it, the steel below the cyan. Not pretty. More of the same ugliness with Twitter. Had the potential, just once you get that crossover, you've got to have a continuation moving into the next zone. Did not happen. Even if you wanted to hold on to it for an extra day or so just to see, then it turned red, and it's like, no. And when it breaks down like that, they break down quickly. Baidu was a decent one from a chart view. Actually, it started out pretty nice, but got a little soft and turned the corner for the green below. So a lot of these that were looking potentially okay, most of them have been still in the sell, but Baidu was okay. Apple was still all right. Even they took a little bit of a hit there. Fast, that big separation again, not narrowing either. In fact, that steel dips below. Though you're not seeing, what's interesting about it is not a huge short activity in the sense that Cyan not popping up in a dramatic fashion, which means that it can get worse. Because if shorts actually do get activated in here, it could certainly create a little bit more drama. Nothing wrong with a little drama. It increases volatility, which adds to some option capabilities. And Facebook's not that ugly. It's the same setup here. Again, just not breaking into the new zone is just going to require getting that to pop in there. And in this case, you need red to move up. But pivot up in red would be attractive because then you'll have higher, lower peaks for your red. Likewise, if green had tilted down. So I would prefer to see a sharp tilt down in green that pivots up. And then I've got rising pivots like right here where you can project that you're going to get something out of it when you're not in deep red. Can't always dictate what these things are going to do. You just have to accept the readings as they are, and if you don't like them, move on to another one because there are plenty of options. We can take a look at the intraday from yesterday real quick. So yesterday, right after I finished putting up the report, we got this lovely little pink candle suggesting lower, and the pink candle was just representing what we would refer to as our DOC spread. And in fact, why don't I just increase the DOC here so we just get an even bigger view of it, because the chart really is irrelevant to what we're looking at on this. So we started out with our first crossover, created a little peak, but then when we moved down here, we were at a much lower level with our red, and when that peaked over crossed, was the next bar that we popped up a little bit, gave the opportunity to capture a little extra. And sure enough, it's just a matter of waiting for that. And typically, I would usually tell people about 2 bars. And then what did we get? Boom, the cascade. We ended up with deep red, knowing that any little pop there wasn't going to do a whole lot of anything. We did get a decent buy as it started to move up into the zones here. And then we developed this little crossover where the steel dipped below. And we never made it above. And this actually will be a secondary definition that I'll include for a version of a DOC spread where you get the steel dipping below the cyan with the cyan above 0, and where you've never actually had the green move above the red or white in order to give you that secondary transition. But sure enough, peaked over, rolled. The second one was the nice little buyback that came right here, deep red, beautiful spider setup, and yeah, the cascade continued from there. That was a pretty easy one. So all in all, very nice. Yeah, I'm still holding over a portion of mine from the other day. Where did I get it at that? I can't even remember. Got my stops in, multiple locations. So the 79.50, which that's right over here. As we came into the peak, you could see that developing on the lower time frame. Took advantage of it. And there you have it. Pretty straightforward. Even within it, there were still some long plays. It just overall, we had that general idea that the market has got some obstacles ahead of it, but nothing, I think, too dramatic. You can see it from the 50K, and that would be an easy one to see as a different reference as we turn around. But it is normal. ebb and flow. It would be nice to see a couple of little good-sized drop days because that will increase some implied volatility, which would make some option plays a little more attractive when we get the little increase in some volatility. But pretty straightforward overall. Even within this read right here, you can see that we had the nice break up right there, a little bit of pop, retraced it pretty easily. It hasn't really broken down much from that spot there, though you still have this nice little separation between them. And that's what I always look for, is when you start getting that separation of the 3 lines below versus the 2 above. It gives you a nice clean expectation. But as always, I'm going to continue my programming so that we can get some of these things finalized as far as color. Moving along, just a lot of individual lines, one step at a time. As always, though, trade well. Look for me on private Twitter feed, StockTwits. Trade well.